Well, I think what I have, like Munger says, we are old too soon and wise too late. What is gradually sinking in is a willingness to pay up. And the other thing that is sinking in is, which is more important, is a willingness to hold. So it is not, I mean, the two big mistakes that I have made aren't, I mean, one is very obvious, passing on a number of great businesses because they looked optically overpriced. Okay, in the end, it turned out they were not overpriced, but when you looked at them, they looked expensive.
Hmm.
It's just that they were such awesome businesses that you could have paid 30, 40 times earnings and still done really well on them. And the second more difficult thing is that you buy something that's an incredible business. Maybe it's available at 10 times earnings, and it's worth 20, 30 times earnings. And it does well, it gets to 20, 30 times earnings, and you sell it. And it keeps going. And that's the other thing. So those are the two big mistakes, is being too much of a cheapskate, not paying up, and being too much of a cheapskate and not willing to hold. And I'm hoping to get better at both of those. So there's still a lot of learning and growth for me to do.
What do you do to try to get better? I don't know. For me, I have like, whenever I see something amazing, I write it on a post and I post it to my monitor. So I have like a couple of things, use Parkinson's and Pareto's law to get more productive, right? Do you anything like that? Do you have any post-its, or do you have any other routines to not forget the lessons that you learned?
No, I think the main thing I try to hammer into my head every day is the very simple notion that capitalism is very brutal. There are very, very few businesses that are truly exceptional businesses. If you find yourself in the favored position of being an owner of such a business, don't worry about the valuation. So I'll give you an example. When I made the Fiat Chrysler investment, embedded inside that 5 billion of Fiat Chrysler was Ferrari. They owned like 90% of Ferrari. And then a few years later, they took Ferrari public. I think Ferrari is at about $270 a share right now. And effectively, when I look back at when I made the investment in 2012, I got my Ferrari shares at about $13. So it's gone up about 20 times since the 2012 to 2021 or 22 is about 20 times. And the thing is that when they took it public, it came public at $40 or $45 a share. And my thinking was that, okay, these guys are pretty smart. When companies go public, they will try to extract, maximum value. They're not going to take it public when it's undervalued. So I thought maybe Ferrari's worth $50, $60 a share or something. Who knows, right? It wasn't a part of the business that I was very focused on. I was focused on all their Jeeps and Ram trucks and all of that, and I'd really figured that business out. This business was a little strange because it came public at like 40 times earnings, so that already is, above my pay grade. I didn't think it's going to go to 200 times earnings, and I think I sold some Ferrari at 60 and 100, and maybe 130, and so on, and all those prices I felt were pretty good. And in hindsight, the unfortunate thing was I bought a Ferrari, but I bought it after I'd sold the stock. I really understood the business after I bought my car. And that's when I realized what the motor Ferrari is and why it is such Ferrari is a business that can earn whatever it wants. It can have whatever net income it decides it wants. It's in a very favored position. They are one of the most well-recognized brands in the world. And in 70 plus years of history, they have never spent $1 on advertising. There is no other brand I know that's in the top 10 or top 5 most well-known brands on the planet that got there without a boatload of advertising. Just look at Coke, for example.
Oh yeah.
So what I'm just saying that this is a very unusual business where even today, from 2022, going back to 1950 when Enzo Ferrari formed the business, they have never advertised.
That's crazy. I mean, did you then try to revise your mistake of selling, and even at a higher valuation, try to get the shares back after you understood the mode, or is this hard pass?
That is usually too painful for a brain like mine, and too much above my pay grade. I've never been able to do that really. And of course, you already paid the penalty, you paid the taxes, you've paid all that. Another one was Chinese company, Maotai. That was another one that it's the most valuable liquor company in the world now. And, it's a brand you never heard of, but it's worth several $100 billion. It's worth a lot more than the top two or three companies put together. And Maotai is a business where, a bottle of Maotai sells for about, I don't know, must be much higher now, north of about $1,200 or $1,500. It's a small bottle. And their cost, I visited the Maotai factory in China, middle of nowhere. I think the cost per bottle must be less than $3. It's one hell of a business. And 80 or 90% of the Maotai sold in China is counterfeit. So the demand is so high, and the company cannot keep up with the demand, that even the fake stuff gets sold at those prices, even though they try so hard to. And they come up with these special editions, 40,000 a bottle, 70,000 a bottle, gone 15 minutes.
That's nearly a collector's item at one point.
Yeah.
Probably.
Well, so when they cracked down on corruption in China, because it used to be that you took these government officials out for lunch or dinner, and you gave them Maotai to drink, and then your projects got approved. It became such that in China, if you were a government official caught dining somewhere and someone took a picture with Maotai on the table, that was pretty much the end of your career, because nothing clean was going on when there was Maotai on the table. So
Interesting.
when that happened, that's when the stock tanked, because so much of their sales were this type of entertainment. That's actually when I had bought the stock.
Because
And
you know that if this is the typical, if they clamp down on that, the demand is still high, so other
yeah,
people
and the
can
thing is,
start buying
The
it.
rise of China is still going on. I mean,
Mm.
the thing is that Maotai is very limited in terms of the quantities it can produce, but Chinese per capita GDP is going to double, triple, quadruple in the next few decades. And so all those hundreds of millions of people who suddenly become upper middle class or rich, they have very few ways to express their wealth.
And then they go to, it's like the LVMH of China a
Yeah,
bit.
I mean, like if you look at all the European luxury brands, LVMH and so on, look at what portion of their sales, not only in China, but to Chinese origin people all over the world.
So you are still very bullish on the Chinese market.
I think in general, China is going to keep rising. They are a naturally entrepreneurial people, who were artificially kept in a non-capitalist system. So that genie is out of the bottle, and they are rising. They're getting more educated. They're getting better infrastructure. So I think that it's going to keep continuing for a while. Yeah.